Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Last trading day of the year. Hope everybody has had a great week. As I apparently as I mentioned last time I was with you on Tuesday, the algorithms apparently didn't get the memo, right? While everybody is supposedly on, kind of chilling, vacation, markets are swinging all over the place, right? Hopefully you guys took advantage of some of that. Okay. Where do we end the year? Let's talk about that. This is going to be, obviously, this is the last trading day of the year. We actually had a really nice pop at the end of the day here. So the S&P, in a nutshell, let's take a look at that. So before I move on, obviously I want to wish everybody a really happy new year. I'm really excited for next year. I think we're going to get tons of volatilities. If you're equipped to deal with the movement that we're having in the markets like we are today, you are going to continue to see some excellent opportunities. Here at TTS, I'm building a lot of volatility type of movements with the options and the S&P. I had a really good class on Wednesday. It had a really good turnout. And if you want to sign up I'm going to have another class in about a week and a half. So I'll announce that coming up here on Twitter. Also, I will, if you guys want to sign up for the newsletter, I didn't publish a newsletter last weekend because it was Christmas, but I am going to write a year-end kind of thing coming out on Sunday. So if you're not a subscriber, go ahead and subscribe to that, and obviously get on the channel and so forth. So really, really psyched up about what's coming next year. Okay. And we actually had a very, very good year this year here at TTS, and primarily just doing lots of volatility plays, not really getting dogmatic in terms of, getting too bearish, getting too bullish, as I talked about. Buying low and selling high worked excellent this year, right? And even today, the market was down this morning and then just has a monster rally. And so what happens with a lot of folks, especially, maybe that's something that you want to think about for the new year, is if you got caught up in the bearish tone and essentially, didn't want to buy anything, you missed out on a bunch of good trades, and possibly even got FOMO on the way down and got, probably lost some money when the market had these massive bounces from the June lows to the August highs, and even recently from the October lows, and even day to day. So where do we end the day today, and pretty much December, is essentially in a big range. So if you really just pull up your charts on the S&P for the last month, we have essentially, in a nutshell, we have been trading between 3,800 and 3,900, even today, right? Even the last couple of days, that's pretty much it. We had another big range back in November, and now we're settling into a lower range, much narrower range. And so I do expect that to persist. So we're probably going to continue that. Whether the breakout points are going to be 3,800 on the downside, which will take us all the way back down to about 3766 area. And then the upside, if we break above 3917, we'll probably revisit the 4,000 level. Okay. So that's kind of what I'm looking at on the S&P. NASDAQ still laggard, but it did actually have another strong rally into the close, and looks like it wants to break above that 11,085 level in the NASDAQ. So it's going to be interesting. Again, if rates can stay down and not really surge a whole lot, the NASDAQ does have a chance of recovering in the first, probably in the first couple of weeks. So I do expect, there is a seasonal bias of because all the money, all the retirement pensions and everything have to put money to work in the new year. So there probably will be that could be a bit of a tailwind for stocks in the first couple of weeks of the year. But then after that, I do still believe that we're going to get lots more volatility and probably a test of the lows at some point in the first quarter. We do have CPI coming in middle of January. That's on January 12th. So we'll look forward to that and see what happens there. But all in all, not a lot of change since last time I was here. The best performer this year clearly has been the Dow, and that's simply because it's only 30 stocks. It's price weighted, and it's got a nice set of stocks there. It's got some of the energy stocks, Exxon, Chevron, and some of the healthcare stocks, some of the staple stocks. So that really helps out. Okay, and the Dow. If you look at that chart, also has a very clear 33,600 on the Dow is a very, very clean kind of support area where it broke down from. So that's going to be really something to look at. I typically don't look at Dow futures, and I haven't in the past. But into the new year, I spoke to my members this today. We're going to start actually focusing a lot more on the Dow futures because that really has some really clean levels that have in fact been working quite a bit. So I know most people focus on the S&P, but again, you got to expand your horizons a little bit. So that includes myself. So I will be looking more at the Dow futures, okay, going into the new year. Okay, all right. Now, bonds. Let's take a look at bonds. Bonds did pull back. They're kind of hovering around the 112 on the 10-year and the 5-year. So this is going to be really key as to whether the bond market can behave into the new year. And if it does behave, that's going to really set up for that first couple of weeks of rally in the Nasdaq. So it's going to be interesting if indeed this was the pullback after the big rally in the bonds. I think we're going to watch the bond market very carefully and see how that plays out because nothing really going into the new year. Nothing's really changing a whole lot. We still have high inflation. We still have the Fed on the war path. They're probably not going to, they're probably closer to the end of the cycle, but it's all going to be predicated on how employment and housing and inflation that's got to come down because I don't think they're going to stop. So unless that happens, we're going to be in for a lot of the same stuff. Okay, and then there's some other kind of geopolitical risk I think coming up in next year. China is also going to be a big deal next year. China, and then their possible kind of to use a big word, they're getting a little bit more aggressive on Taiwan. So that I think that's really going to be something to really keep an eye on for next year. And I did a session with I did that session on Wednesday talking about the first quarter and the potential black swan. I think that it could be a black swan, and that is the one thing that could cause that final washout, which I talked about in my class on Wednesday. So we'll have to see how that goes. Dollar, interestingly, not a lot going on in the dollar, and it's looks like it's ready to break 103.5. I think that you guys pull up your charts on the dollar, you can see that very clearly. We ended up right on the cusp of that. And so we'll see if that breaks down and then we go all the way down to 102.50. I think ultimately, as I've been discussing here, we do go and test that 100 level on the dollar index. And so we'll see how that goes. That's another one. Now on the currencies, the two currencies again. Notice the yen today just had a massive rally, came down, pulled back after after that big surge when Japan changed their policy and went from negative interest rates to positive interest rates. And then so we had that pullback, and now we have we're almost back up to the 76.95 level, which is where it peaked and came down. So I'm going to be looking for some opportunities to pull back in the yen, and then there's some levels up top also that I'm going to be looking at. So the yen and the peso, you guys have heard me in here. Those are the two currencies that have been in focus, yen and peso. Everything else, until the dollar really breaks down, we'll probably get a nice pop. And if you look at Canadian, Euro, all of these have been kind of just range trading, very tight ranges. They're probably ready for a breakout, but we don't have anything there so far. That's probably going to change also in the new year. So that's another area where we kind of really not done a whole lot, but I think that's going to change as well. And let's move on. Gold also looks really poised for a breakout. I think I've been talking about we're trying to get long gold, silver, also metals. I'm really getting bullish on gold and silver. Also copper. In fact, we're trying to get long this stock called Vale. I don't know if you guys are familiar with it. It's a Brazilian. They basically are iron ore, nickel, and some copper. That's a great way to play that long term. Check it out. VALE is the ticker. It's a little $16 number, actually $17 number. That thing has been as high as 40 something, and it bottomed at 12. We're trying to pick some of that up. So check that out. Okay. And then on the energy front, oil had a nice pop at the end again today, right? So we had a nice pop in oil, holding around the 77. We've got 82 as resistance in oil. So we'll see if that actually gets some traction. If it breaks 82, then I think next year we're going to see oil back at 100. That's my again. It's based on a lot of the fundamentals and stuff, because I think the fundamentals backdrop on oil is still extremely bullish. So that is a market. Obviously, we're in the XLE. Trying to play it on the XLE. It did actually hit 70. It's been really choppy, but any kind of opportunities to get long oil is going to be something we're going to be looking at in the first quarter of next year. We are long nat gas. I think I mentioned this via the UNG. And if you look at your chart, it's been hanging around 450. So, we were waiting and finally got in on that. We're actually long 1439 on the UNG. So we're down a couple of pennies here. We're down about to close at 1407. So we're down a couple of pennies. No big deal. But I do expect that if it does hold, which we don't know, we have another pop up to around 6, and it's all going to be predicated on the weather. Part of the reason that nat gas is really sold off hard is because the weather, after we had that cold snap in the east, obviously the weather's gotten better, and we actually have warmer temperatures in Europe too. So if that changes, and there's also an LNG situation that's kind of bogged down right now. So when that opens up, the demand is also going to come back. So that's the situation there. On the chart, 450, got to hold. If it drops below 450, we're probably heading down straight down to 4. But I still think at some point, nat gas is going to be a great buy. We're taking a stab at this right here with, again, a couple hundred shares of UNG, because the futures, if you've been looking at the futures, you know that those have been extremely volatile. If you've been trying to trade nat gas futures, and even the options are really the implied volatility is like over 100 on the option. So the best way to play it is with the UNG. There's also Boyle and Cold, KOLD. If you want to be super aggressive, you can do either one, KOLD or BOIL. That's the ultra long and short on nat gas. Those things are crazy. That's even that's just as bad as the futures. So in any event, yeah. So 450, and if we can hold on to that, I think we got a shot at 6, which would take our UNG position from 439 to my target is about 20. Okay, just in the near term. So we'll see how that goes. Finishing up here, grains. Notice, and you've been if you've been on the channel here and listening to me for last couple of weeks, I've been turning also very bullish on the grain markets. And you notice soybeans popped, broke above 15 a bushel. They're sitting at, actually traded up to about 15.35. Wheat also very strong. Corn broke above a really good level too. So interestingly, the grain markets are really starting to perk up. I can see a really strong move in the grain markets in the first quarter also. Now, in the near term, grain market, the futures will be closed. I think I kind of mentioned this the other day I was in here. Because of the holiday, we had New Year's on Sunday, and then Monday is closed. And typically you get the grain markets open like on Monday. We have futures opening on Sunday, the equities and bonds and currencies and everything. But the grain markets will not open till 9:30 Eastern on Tuesday. And last week when we had Christmas, we had a huge gap in soybeans. And so and that actually is a great opportunity. So if you're going to be interested in trading the grain markets, pay attention to the grain opening on Tuesday, this coming Tuesday at 9:30 Eastern, the same time the stock market opens. That's going to reopen the grains after they've been closed for like almost 3 days. And so I do see there's going to be probably some gap opportunities there. So if you guys are interested in that, I would encourage you to do that. Okay. So in a nutshell, everybody, really excited for the new year. I think we're going to have tons of volatility, a lot of the same stuff that's been happening, but I think it's actually going to get more volatile because, again, when everybody comes back and everybody expects, the markets to continue lower, which I don't think, I do expect they're going to go lower, but I think we're going to have a nice pop in the early part of the January, which will actually set up really nicely. And again, one of the things I've been telling you guys about, you notice when everybody got super bearish, even coming into this year end, everybody was super bearish. And even though the market hasn't really made any headway to the upside, notice that every time they sell it off, because there's so many puts in the market, they rallied. Even today is a great example. And that's really sets up great for those of you that want to buy low and sell high, which is, as you guys know, that's what I always do regardless. And so this range trading is really fabulous for this type of strategy that we're using. If you're interested in joining me next week or for 5 days free, again, hit the link below and enter another class. Just, ping me at support@transparenttrading-solutions.com. If not, I'm going to get out of here. Have a wonderful weekend. Enjoy. Happy New Year. let's put this 2022 behind us. It was actually a pretty good year for us. Let's keep it going. And if you had some issues last year, let's make some changes, and I can help you with that. Okay. So, hi, Indra. Welcome on board. Yep. So, okay. All right, everybody. We'll talk to you guys on Tuesday of next week. Have a happy new year and enjoy your weekend. Take care. See you soon.